Hi, thank you for coming back. As per our last video, we will follow up on how many Bitcoin ETFs are readily available at this moment for you to start investing in. A brief look into the advantages and disadvantages of Bitcoin ETFs from a holistic view. Wonder how a Bitcoin ETF works? What are the differences between Spot and Futures ETF? If you haven't watched our previous video about that, please do so on the card above to help you understand better today's discussion. Before we start, let's do a really brief recap. Bitcoin ETFs are exchange-traded funds that track the value of Bitcoin and trade on traditional market exchanges, allow investors to invest in Bitcoin without having to go through the hassle of using a cryptocurrency exchange while providing leverage to its price. An ETF is an investment fund that tracks the price of an underlying asset or index. Today, ETFs are available for several assets and industries, ranging from commodities to currencies. A Bitcoin ETF would work the same way. The price of one share of the exchange-traded fund would fluctuate with the price of Bitcoin. If Bitcoin increases in value, so do the ETF, and vice versa. But instead of trading on a cryptocurrency exchange, the ETF would trade on a market exchange like the NYSE or TSX. How many Bitcoin ETFs are there? There are various companies offering Bitcoin ETFs, and each is available on their own respective exchanges. Our previous video mentioned above ProShares BITO Bitcoin Futures ETF, which currently holds around $1 billion in investments. BITO is listed on the New York Stock Exchange, NYSE Arca. Another Bitcoin ETF is the Valkyrie Bitcoin Strategy ETF. Also offering Bitcoin Futures ETFs, Valkyrie is listed on Nasdaq with the BTF ticker. Then, we have the VanEck Bitcoin Strategy ETF. Providing users with exposure to Bitcoin Futures ETFs, the VanEck Bitcoin Strategy ETF is listed on the CBOE exchange with the XBTF ticker. In the U.S. market, BITO, BTF, and XBTF. At the time of this research, Canada has 6 ETFs listed in TSX, Toronto Stock Exchange, while Brazil Securities Commission CVM have 2 ETFs, BITH11 and QBTC11. Surely, more will mushroom. Which ETF is best is up to the user, of course, as they're available on different exchanges, which can vary in rates. Next, we look into the advantages of Bitcoin ETFs. First, convenience. Investing in a Bitcoin ETF provides leverage to the price of Bitcoin without having to learn about how Bitcoin works, having to sign up for a cryptocurrency exchange, and taking on the risks of owning Bitcoin directly. For example, Bitcoins are held in a wallet, and if an investor loses the password or seed phrases or careless with their security to the wallet, their Bitcoin is lost forever. A Bitcoin ETF simplifies the process of investing in Bitcoin. Just left the fund manager to deal with all the fuss since you pay fees. Second, portfolio diversification. An ETF can hold more than just one asset. For example, a Bitcoin ETF could comprise Bitcoin, Apple stocks, Facebook stocks, and more, providing investors with the opportunity to mitigate risk and diversify their portfolio. Similarly, by trading on a regulated market exchange, a Bitcoin ETF would provide investors with the chance to diversify their existing equity portfolios and better risk exposure management. Never put all your eggs in one basket. Third, tax efficiency. Given that Bitcoin is unregulated and decentralized, the majority of the world's tax havens and pension funds do not allow for purchases of Bitcoin. On the other hand, a Bitcoin ETF trading on traditional exchanges would likely be regulated by the SEC and eligible for tax efficiency. Disadvantages of Bitcoin ETFs. We have 4 on this list. First, management, annual or service fees. ETFs usually charge management fees for the convenience they provide. Therefore, owning a significant amount of shares in a Bitcoin ETF could lead to high management fees over time. The second, is ETF inaccuracy. While ETFs track the price of an underlying asset, they can also have multiple holdings in a bid to diversify the portfolio. However, this suggests that a 50% rise in the price of Bitcoin may not be accurately reflected in the value of the exchange-traded fund due to its other holdings. Therefore, while an ETF provides leverage to Bitcoin's price, it may or may not be an accurate tracker of its price. Third, limits to cryptocurrency trading. Bitcoin can be traded for other cryptocurrencies, like Ethereum, Litecoin, XRP, and more. A Bitcoin ETF would not be eligible to trade for other cryptos, as it is not a cryptocurrency but simply a contract of investment fund that tracks the price of Bitcoin. Fourth is the lack of Bitcoin ownership. Bitcoin serves as a hedge against central banks, fiat currencies, and equities. By being independent of central banks, Bitcoin provides a way to mitigate risks associated with the financial system. Bitcoin also protects users and investors by providing privacy through the Bitcoin blockchain. A Bitcoin ETF would be regulated by the government, eliminating these benefits. We hope you learn new knowledge today and may be helpful during your research when Bitcoin ETF is available in your region as an alternative investment option. Retirement giant Fidelity recently started offering Bitcoin potentially up to 20% as an investment option for U.S. citizens' 401k retirement accounts, an opportunity for millions to have Bitcoin's products exposure. For sure, Bitcoin and cryptocurrency will be more and more mainstream in the financial market. It's an exciting development moving forward. Please do remember to support us by subscribe, like and share. Thank you.